throughout the dates. Right. So welcome to today's call. Today I was looking at a statement done by the president of the Republic of Uganda. Yes, I was looking at the statement done by the president of the Republic of Uganda, where he categorically was describing about the medical fraternity of internship. I have no words to comment, but the following are my statements. Number one, the education system of Africa generally will allow you to have a living. But personal education, like the one we are learning today, will give you a fortune. So with that said and done, let's get started into today's lesson. Welcome everybody. I may not go into personal welcoming for everyone, but all you're most welcome to today's fantastic call, and let's get started. Okay, in our previous classes, specifically for here, in our previous classes, specifically for this morning, 7:30 a.m., where we learn about financial markets, and basically we base what we call TA. TA stands for technical analysis. And technical analysis is basically using the past performance of markets, using the past performance of markets, or using the history of market performance markets to predict the future. To predict the future, because markets do what they have ever done. So markets repeat what they have ever done in the past. So we use that to be able to tell whether this coin will be able to give us some profits in the future. But as we do this prediction, we have tools to help us. And one of the best tools is called TradingView, which is an application you download from your Play Store. And then we start looking at charts. What are charts? This is what we call price action. Price action is what the buyers are doing, and sellers in the market. So these ones are represented into what we call candlesticks, which later could form what we call candle chart patterns, which we have been able to look at. So as they form patterns, when a group of candles, when a group of candles are looked at, they could form what we call a pattern. And so this pattern can be drawn using tools like trend line. And there are three important markets or market movements. We have a market that is on an uptrend. We have market that is on a downtrend. And we have a market that is ranging. What's the difference is what we have looked at, that the market will continuously form a pattern. And so if this was the lower low, that's the lowest point, and then the market formed a highest point in the area, which becomes a higher high, then the market continues to start forming a higher low and a higher high. This one is a higher low because it's a high point from the lowest point. Then it continues to form what we call a higher low, and the highest point in the market, a higher low, and the highest point in the market, and then it forms a higher low, and then a highest point in the market, then it forms maybe a higher low. So this means that if we connect these higher lows from maybe this point and try to draw a trend line below this, we could see that the market is forming below our line, and we can say this market is on an uptrend. But still, in the same counter-harmonic move, we can harmoniously say that although the market is making an uptrend, as it makes these moves, it does majorly three major things, which I might describe today. The market makes a continuation. The market makes a retracement. Market makes a reversal. These are usually three things that happen in the market. Okay. So when we see this, we can say the market is making a continuation to the upside, going up. But when it moves from here and goes up here, this is called a retracement. It moves from here, then goes up, then this is called a retracement. This is a retracement. This is a retracement. But when the market reaches this top here, and then the sellers start selling hard, and then we see the market now changing from a higher high, which was here, it now forms a lower high, a lowest point from the high. Okay. Then from here, it changes its perspective. And from this point, we would expect it. This is now, it starts like to be a ranging market. From here, then it forms a what? Still a higher low, because it's a highest point from this low. Okay. This market can do a lot of, then maybe it drops again from a higher low, then it forms a lowest point in the market, which is a lower low. Then it forms another higher low or lower high. So you find that the market is now making a mixture of stuffs together. Okay, and this we would call a ranging market. But if this market now starts dropping, it may not drop drastically. It drops and comes down from where it came from, then we could say the market has now formed a reversal to the downside. So the market makes these three movements all the time. Okay, the market can make a continuation to the upside or make a continuation to the downside. A market can always form a retracement. A retracement just means the market was moving up, maybe it comes down, or vice versa. The market was moving down. The market was moving down, then it goes up a little bit. So this move is what we call a retracement. But if the market reverses from where it came from, then this is what we call a reversal. So a reversal to the downside and a reversal to the upside. Generally, the market can also form what we call a downtrend. Or the market can also form what we call a ranging market. Okay, where you see, for example, in a downtrend, this was the highest point, which was, let me say, higher high. And drastically, we find that the market forms a lowest point, which is a lower low. Then it starts moving from a lower low to a lower high. Then it drops again lower, then forms another lower low. Then it forms another lower high. Okay, then it forms a lower low. That's the lowest point, lower than this previous one. Then it forms a lower high. And when we draw our line from maybe this highest point and connect 2 to 3 points here, we find that the market is forming below our trend line. The market is forming below our trend line. And this means that this market is on a downward trend. And so as a trader, this line, this one is a resistance. The market is being resisted from going below or from going above our line. And if the market breaks this resistance and it tests the resistance, then this is when now we plan entering this type of a trade, because we wait for a breakout and a test, a breakout and a test, like it happens on an uptrend. Okay, let's say this is the lowest point, the lower low, the market moves from this lowest point and it forms a highest point, which is a higher high. Then it forms a lowest point, lower than this one, but higher than this one. It's called a higher low. It is lower than this one, but it is higher. When we draw a line at this point, they all appear at different prices. Then from here, it forms a new higher high. Then it forms a new lower high. Then from here, it forms a new higher high. Then it forms a new higher low. They all come at different points. So this one, it was at, let me say 1, this is at 2, this is at 3, this is at 4. Yes, it is the lowest point, but this lowest point is higher than 3. Yes, it is the lowest point, and this lowest point is higher than 2. Yes, it was the lowest point, but this lowest point is higher than 1. This movement where the market, yes, it forms what we call a retracement. This is what we call a retracement. The market retraces. This is a retracement, but the retracement does not bring the market to a price lower than its previous low. In general, this market is on an uptrend. And as a trader, when you draw the line below the chart like this, you are waiting for a point if you want to trade the coin downwards to see that maybe from this point, once it goes up and forms a new higher high here, you are waiting for the market to break this line, which was a support. Here it was called a support. Once it breaks this line and it retests the line, then it becomes a new resistance. So once it tests the line, it becomes a new resistance. Now you are sure, since it has tested, it has broken it, then it has tested it, then you expect the market to continue to the downside. And this movement, for the market to continue to the downside, is what we call a reversal. So here we shall say the market is forming lower lows and lower highs, showing us an aspect of an uptrend and forming these retracements, showing a continuation to the upside. But once it breaks this line that was a support here, and now it is a resistance, and it tests the area, then we can definitely say that the market has broken the resistance, forming now a reversal to the downside. Am I making sense to someone tonight or this morning? Because now, as the market is forming these movements, I'm using lines. As the market is forming these movements, these happen in terms of candles, and it is important for someone who's trading to remember. Very early. Friends. Now, it is important to remember that red candles in the chart, I'm just reminding you before now I go into my lessons, red candles represent sellers. And it is important for every trader to know, and it is key, that a red candle where it starts forming is called the open. And where it ends is called the close. And this point is a high, it was a high point, and where it ends is the lowest point. And if there's change in the shape of the candle, for example, you find a red candle like this, or you find a red candle like this, or you find a red candle like this, or you find a red candle. This is called a wick or a shadow, just reminding you. And it is important for you to have an interpretation of what you see. You must be able to interpret what you see. What causes this wick to be here? Because it interprets something that you, as a, and there are two important things. If this red candle starts from here, but now you find that the candle that started from here, the body is not here, it has been cut off to become like a straight line like this, then the body starts from here. This definitely signifies to you, and you needed to know, that why is it like this? Why is the red candle that starts from here appearing this? And there are two terminologies that I will need some answers in the chat. We have what we call buying pressure, and we have what we call selling pressure. And in this, I'm just going to use two examples. I'm just opening up your minds to prepare myself for my coming classes. This, we have example A. Let me use black. We have example A and example B. I want you to type in the chat if you know what is this. What is A? Is A buying pressure? Is A selling pressure? Is B buying pressure or is B selling pressure? Some answers in the chat. If you have been in these classes for some time, I expect some answers in the chat. Some answers in the chat. Some answers in the chat. I want you to differentiate for me what is A. Is A selling pressure? Is A buying pressure? Because that's where trading ends the game. So you must be able to create a better understanding, of the two, because that's trading for you. Okay? People are saying A is buying pressure and B is selling pressure. Okay, beautiful, beautiful, fantastic. Huh? Okay, to simplify the understanding for someone who's new that may not understand me, let me make it clear here as I prepare you now so that tomorrow, when people are buying, do prices go down or they go up? Do prices go down or they go up? Now, this is a green candle, and a green candle starts from below moving up like this. Where it starts is called the open, where it starts, and where it ends is called the close. So you can see that the prices of buyers, whenever buyers buy, prices go up. Vis-a-vis sellers. Whenever sellers, because when the sellers start, they start from here. This is the open, and this is the close. When the sellers sell, price down. Now I have a question. When buyers buy, yes, you know, prices go up. Vis-a-vis, when sellers sell, when selling happens, prices go down. Okay? Understand me, friends? When we are buying, we expect prices to go up, and when people sell, expect prices to go down. In cryptocurrency, in crypto, before I go to this, now, before I go to this, 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 if this was a green candle and it has a long wick at the top, and we know that when buyers buy, prices go up. And we also have a red candle like this with a long wick at the top, and this is B. Is this buying pressure or is this selling pressure of A and B? Okay, some answers in the chat. Sorry for that, I was speaking my daughter. Some answers in the chat. Okay, so both are selling pressure. Okay, both are selling pressure because we could expect that the market will go up, but the market went down. So if these candles, just for learning purposes, if these candles had started from here, and why is it that now the body ends here? It means that this was a sale. This was a sale. Vis-a-vis, 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 this was a green candle. A green candle that now has a long wick below, and this is a red candle that has a long wick below. This is A, and this is B. What is this pressure? Because this, if this was a red candle that started from here, it is expected for this body to continue up to here. But why is it that there is someone pushing it from below to continue going up? From below. If this was a green candle that started from here and then went up to here, it means that when it reached here, the sellers came in and they sold and sold and sold and sold until the prices went up here. But because they were stronger than the buyers, that's why the market behaved like that. Now, I want to draw selling in crypto could happen. You know, crypto is divided into two. We have spot market vis-a-vis derivatives. Derivatives. What are derivatives? Derivatives, this is where we have futures. This is where we have margin trading. Then in spot, there are even others. They are running out of my head. But here, in most cases, like for example, futures, this is a contract that you open with an exchange. That according to what I see, Bitcoin is going to go up. And this, we call it a long. And you say, according to what I see, Bitcoin is going to go down. And this is what we call a short. So you are saying you are betting against the market. That you say Bitcoin is going to go down. You are betting against the market. That you said Bitcoin is going to go up. So it is a contract you are opening with an exchange. So you don't own these assets. They are not yours. If the market goes against you, Bolingo, you will make a loss. Vis-a-vis the spot market, that if you say Bitcoin, here you just need to say only one way. Bitcoin is going to go up. From where you bought, it's going to go up. If it goes against you, if you had bought one BTC, you will still remain with one BTC. But we have an opportunity that we can trade both in spot and both in derivatives. But the beauty about derivatives, they bring in what we call leverage. You can leverage. Leveraging means you are using money that is not yours. You have $100 and you request for a 20x. You are saying the exchange, borrow me some money that I don't have and multiply my capital times 20. So this one is a 2. So it means that you who had $100, now you're going to trade with $20,000. But when the market goes against you, the amount of money that will be lost on you will be more than someone who does a 5x, than someone who does a 1x, than someone who does a 2x. Am I clear? I'm not digging deep into that, but I'm opening up your mind. I get back to buying pressure and selling pressure. Now, let us look at the buyer's power, because this is where now my power is, the buyer's power. I've looked at this before, but I just want to emphasize, okay? If a green candle forms like this, it has no wick at the top and it has no wick at the bottom. It shows that buyers are in total control. In simple understanding, buyers are in total control. There is no nonsense. The buyers are available and they are in total control. When these things start to change a little bit and you see like a small wick at the top, and then this kind of forms like this, you'll understand that buyers are still strong. The buyers are in the market and they are still strong, very strong, my brother. When you start now seeing things changing a little bit, there is a wick at the top, another wick at the bottom. One, it shows continuation of the market to that direction, to the upside. But it also shows that sellers have showed up. Yes, Mr. Buyer, the sellers have showed up. They have showed up. There is a wick at the bottom here. The sellers have showed up. But the buyers are still in control. Buyers are in control, but the sellers have said we are present. Now, when things start to change a little bit, you find a candle, it has a long wick at the bottom, with a short wick long wick at the top and a short wick at the bottom. It's saying the sellers are stronger than the buyers. The sellers are stronger than the buyers. The sellers are stronger than the buyers. But the sellers are not in control. Yes, the buyers are still in control. Buyers still in control. Okay? You want to go? You are tired of planning? You want an iPhone? You want an iPhone? You get an iPhone? Yes. You get an iPhone. You want to jump? All right, sorry for that, friends. Now, when now things change like this, this means the sellers are active, but the buyers are still more stronger. And once it gets smaller than this, then it shows you the sellers are more stronger. The buyers are so weak. The body, whenever the body, but this and this represents a very important aspect, and that is selling. So when you see a green candle in your chart appearing like this, stop getting excited that the market is going to be very good for you. Start thinking to know that the market is going to go against you. Am I making sense to someone? Am I making sense to someone? Am I making sense to someone? Let me look at the selling side. We have looked at the buyer side. Let me look at the selling perspective. The seller's power. When do we see that sellers are very powerful in the market? One, you cannot enter a market and you say buyers are in charge when you see a full body candle like this one. This means sellers are in total control. The same aspect when there is a small wick at the top, charge electricity, and below like this, it shows you that the sellers are still in control. The same aspect once you have a wick at the top with a wick at the bottom like this, but there is a body. This is one, it shows continuation of the market to the downside, but still the buyers have showed up. The buyers say we are here, but the sellers are still in control. Then, when the other side, you see now there is a longer wick, something like this, because these are the common candles, the buyers are stronger than the sellers when the wick is larger like this. The lower wick is longer. The buyers are stronger than the sellers, but the sellers are still in charge. Now, when you see this one, like this, you just need to know the buyers are active, but the sellers are a little bit stronger. Now, when you get another one where the carbon is very small like this, my friend, just know the buyers are more stronger than the sellers. But this and these longer wicks, they represent buying pressure in the market. But although these that we have discussed are all available, we can look at these candles on a big spectrum. Okay, maybe I was just looking at one candle. Then I can look at 20 candles. I can look at 10 candles. And then I draw a line, maybe above the candles, above the candles, and below the candles, and I form a shape. And I can also draw a line above the candles, and also I draw a line below the candles. I can also draw a straight line above the candles, and I also draw a straight line, a diagonal line below the candles. And so these are different shapes. This was a horizontal line, and this was a diagonal line. This was a diagonal line, and this was a diagonal line. This was a diagonal line, and this was a horizontal line. Now, all of them form an apex. This is what we call an apex. This is an apex, and this is an apex. So although I have drawn using different tools, what I'm drawing this maybe as a resistance. I'm drawing this as a resistance line, and I'm drawing this as a support line. I'm drawing this as a resistance line, and I'm drawing this as a support line. I'm drawing this as a resistance line, and I'm drawing this as a support line. I don't know if I'm making sense to someone. But basically, under contemporary, I can be able to draw several of them at the same time. I don't know if people are learning. All I'm speaking, guangwa, guangwa, bolinjo, bolinjo, penguni, penguni, pandululu, pandululu. Let me start with one of the patterns now. Okay, let me start with one of the patterns. Okay, let me start with one of the patterns. Let me start with one of the patterns. Okay, pattern number one. I can have what we call pattern number one, pattern number one, pattern number one, pattern number one. When I draw a line above those candles like this, that is diagonal, and I draw another line below those candles like this, that is diagonal, using a trend line. This is point A, this is point B, this is point C. This is what okay, so it means the buyers here are pushing the market up, and the sellers here are pushing the market down. Now this is called a symmetric triangle. Drawing two sloping lines, one like this and one like this. Two sloping lines. And they convey at this C, which is called an apex. Whereby the buyers were pushing the market down and the sellers were pushing the market down and the buyers were pushing the market up. It means that the market moved from point B to A, then A refused and the market went down to point B, and then B refused and then the market went back to point A, and then A refused and the market came down to point B. So what are we waiting for? We are waiting for a breakout. This. When the market comes down here, we expect it to break this line, this one. And when it breaks, it tests the line. Then at the test, we make our entry and take our profit to the upside. We are going to go practical. So how much is our take profit? We measure from point A to point B. And after the market testing our line, we make our entry, and that is our take profit. We are going to go practical tomorrow. There is another shape 2. And this shape is what we call an ascending triangle. Yes, we call it an ascending triangle. Okay, we call it an ascending triangle. We have an ascending triangle and we have a descending triangle. Both are important patterns. We have an ascending triangle and we have a descending triangle. Okay, now let's start with the descending triangle. You draw a line above the candles. My daughter, we draw a line above the candles. Then we draw a straight line below, like this. Straight line. Sure. A student. So it means that this is the apex. So descending, the market moves from point A, it comes down to B. Then it goes up again. It is resisted, comes down, it is supported, goes up, it is resisted, comes down, it is supported, goes up, is resisted. We are waiting for the breakout here. Descending triangle. The market is descending. It's called descending. Yeah? Descending. We are waiting for a breakout After the market has broken out, it takes the line again, then it continues in the downside. And this is very important. That's called a descending trap. Then we have an ascending triangle. An ascending triangle. So you draw a line. This is a straight line. The market is being resisted. Then you draw a line below the candles. But my straight line is very funny. So like this. Then you draw a line below the candles that are on an uptrend. So the market, these are buyers. The market is on an uptrend and it's being resisted at this point here. So it means the market is moving from point A to point B, from here to here. It gets resisted. Comes down here, gets supported. Goes up here, gets resisted. Comes down here, gets supported. Goes up here, gets resisted. Comes down here, gets supported. What are we waiting for? We are waiting for a breakout and a retest on the line, then continue to the upside. An ascending triangle, we want the breakout of the triangle. Because if it fails to break out and retest, then the market can reverse to the downside. Can reverse to the downside. Either way, the market can reverse to the downside. Are we learning? Now, these patterns, we are just drawing lines below the candles. We are just drawing lines above the candles. We are just drawing lines below the candles in a straight way. We're using what we call trend lines and using what we call horizontal lines. And when we draw them, they form certain shapes. And we use those shapes to understand the movement of the market. For example, there's what they call a double bottom. You draw a line like this, then you find that the market comes down. The double bottom. The market comes down, touches your line, goes up a little bit, touches your line again, goes up. The touch here and the touch here, it is forming letter W. This is W formation. It is telling you, my brother, we are being resisted from the downside here and we are going in an upside. It's a double bottom. It's like when you draw your line on the top of your candles like this, then you discover the market comes, touches your line, goes down a little bit, comes back, touches your line, then goes down again. So this is a double top. It's called a double top. It is an M formation, meaning the market is going to go down. It's like then there are other formations. There are other formations like I may not go into all of them, but there are so many other formations that can be formed on the market. Okay, there are other formations that can be formed on the market. So many. Just like, for example, a flag. Someone talks about a flag. What is a flag? Flag is simple. The market was moving like this. There was sharp green candles being formed. Then the market starts consolidating. When you draw a line here and a line here, you discover that the market was now just moving in the line like this. Basically, you know, my flag is a little bit straight, but let me draw it again. The market, you draw a line, you see the market was forming above like this on your chart. Then it reaches here, then it forms something like this. You discover that now the market starts moving in like this. My friend, once it breaks down here, this distance that it moved here is going to be the same distance it's going to move, and this is called a flag. Just like a flag. Just like a flag, just like that. Then the same thing happens. The market was going down. You discover the market was going down like this. Then definitely the market ranges. It forms a range like this. You see the market is moving in like this. My friend, the same distance it moved here is going to move it down here. So this is an inverted flag. These are just patterns that are seen by people when they draw their lines below the candles or above the candles. Am I making sense to someone? Because we are going to draw them tomorrow. Okay? Now you draw a line like this. Then you find that the market moves here, goes up like this, comes down here, goes further up like this, comes down here, goes further like this, then comes down here. Now this is called a head and a shoulder. This is the head, these are the shoulders. Now two things can happen here. Once it touches the line, once it breaks it, my friend, the market is going to go down. Once it confirms above it, the market is going to skyrocket higher. Just because you are drawing, you draw a line and see a market forming a shape. You draw a line and you see market forming a pattern. Is it hard or it is simple? Because tomorrow we are going to go practice about these different shapes and sizes. Because tomorrow we are going to draw lines. I will draw a line above the candles, I will draw a line below the candles. Then I know this is a symmetric triangle. I draw a line above the candles, then I draw a line below the candles. Then I know this is an ascending triangle. I draw a line below the candles, okay? I draw a line below the candles, I draw a line above the candles. Then I know this is an ascending. Am I making sense to someone? Because when I draw my line, like this, and I see the market breaks my line here, I expect two things. One, the market can go up, one, the market can go down. Once it breaks my resistance, my friend, I'm sure that this coin could give me 50 to 100% take profit, just drawing lines. Am I making sense to someone? Because I'm done. Am I making sense to someone? Because I'm done. We are just going to draw these lines. Below the candles, we are going to just draw these lines above the candles. And we are going to get different shapes. And we interpret the shapes and we make money. So today, we basically did not go so much practical. We basically looked at patterns. But let's talk about something small as we end this important class. One, always enter on a confirmation. As a trader, it is important for you to always wait for a confirmation. Okay? To always wait for a confirmation. If you don't see a confirmation, do not enter that particular trade. Always wait for a confirmation. Okay? If you don't see a confirmation, then don't enter that particular trade. A confirmation is key. A confirmation is paramount as you trade. And we are going to look at what is a confirmation. Okay? You need to wait for a breakout. And the confirmation must have good volume. So it is most important in a pattern, we buy at the breakout. We establish a resistance and establish a support. If the market breaks above our resistance, then we buy. If the market breaks below our support, then we know that the market is going to go down. Basically, that is what we have been able to learn today. I hope you were able to get one or two insights about our lesson for today. See you tomorrow in the practical part, and I see you on other days as we continue now to get a clear picture, but also a more understanding on the trading aspect using trend lines and using horizontal lines. Those are my best trading aspects. I love them as a person, and whenever I spend some time doing technical analysis, I just draw those lines below the candles, and I just draw those lines above the candles. It's a pen, my sweetheart. It's not a straw. You need to know. Okay, thank you so much, friends. Have a nice day. I'm here just to teach. I don't know who invited you, so I don't share my number on any of these calls. My role is just to teach. My role is not to take anybody's person that has been invited here, and that remains the principle of crypto ambassadors. So anybody is free. Thank you. Thank you. Anybody is free to invite their person here. Thank you so much. Love you all. See you.